Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. We have been hearing a lot about inflation and how we're starting to kind of turn the corner. We're starting to see a lot of retail build up in supply, as you can really notably tell with all of the sales going on right now for Black Friday and Cyber Monday. And we're starting to see gas prices down, right? We saw oil hit 74. I think it's almost a low for the year. I think oil in general is just on the precipice of being red for the year. And we're starting to see a lot of these slowdowns as supply chains get a chance to come back, right? Weaker economy gives a chance for all the supply chains to catch up. The Long Beach, the port there, the backup that was, I don't know if you remember, it was like 30, 40, 50 ships that were just out at anchorage waiting to get in to unload with all the trucker. I mean, it was a mess, right? All that essentially gone. There's essentially no backup in Long Beach. Everything is going well. The only real hiccup with any kind of supply chain right now, it seems to be with this potential rail union strike. But even that seems like it's going to get averted by the Biden administration. And then on top of that, if you just look at what's happening with the chip makers, right, their stocks are crashing because they have so much chips, right? That's not an issue. Nobody's waiting on chips anymore. Essentially, the problem with all these supply chains seems to be over, all right? Now, here's the question, though. What does it currently look like? What is the supply chain? What does the current inventory look like when it comes to the automotive market? And that's what we're going to talk about today. Where are we? What do the numbers say? And does Tesla have a problem, or do other people have a problem? So we're going to be objective today. And again, we're not using anything I'm pulling out of thin air. I'm going to show you where everything's coming from. And we'll start off with CNBC. So I'm not going to play the video, but I took a couple screenshots to talk about this. CNBC had a quick 2-minute segment today, this morning. I caught it briefly, and it's funny how nobody else really seems to want to talk about it. So let's start off with this first screenshot I had here. Let me get this to an appropriate size. Okay, so we'll just put this right up here next to my big head with my tired eyes. Right, first day back from the holidays. It's always tough. All right, so what do we have here? November auto sales average transaction was $45,800, and inventories were about 33 to 34 days of supply. Now, from a inventory perspective, this is still pretty low historically, right? I think historically we see 50 to 60 days. So it's definitely a lot better than what it was. So we know that there is supply building. All right. Then you look at average transaction, 45,800. Well, that's really making Teslas look kind of affordable at this point, right? Maybe not a Model Y, maybe not S or X, but definitely a Model 3, right? So Model 3 definitely falls within this range if you don't spec it out with everything. So I want to bring this up for context because it's going to be important moving forward when we really start to see what's happening, because what we see is inventories building, which is weird because all these automotive companies had talked about how they don't have any issues. They just have issues getting supplies or chips or parts. Well, meanwhile, Tesla seems to have somehow circumnavigated all of this, or these other OEMs are kind of delaying the inevitable about the truth, which is that, well, they can't use this excuse anymore about saying the supply chain or chips or whatever because, well, we have no supply issues anymore, right? We have a surplus at this point. So again, remember, we're seeing inventories build, which, yes, they're still below historical norms, but the point is that they're building. So that leads you to think that there's something going on here. All right, so we see that and great pricing there, right? Then we see this, all right? So this is another clip. Let me, again, zoom this down. All right, put this right by my big fat head again. All right, 2022 auto sales paced for 13.7 million. You're going to want to remember that because we're going to get into some charts in a second here. So 2022 auto sales are on pace to sell in 2022 13.7 million vehicles, right? This is pretty straightforward. Now, again, this is a estimate, right? This is what we're on pace for. So obviously, we still need to get the final November numbers. We still have December ahead of us, so this can change. But the point is 13.7. Hell, we can round it up to 14 if you want, right? Just to make it seem a little better. It's not going to matter. The numbers you'll see in a second. All right. So I'll show you one final one, which I think is kind of important for context. And again, let me shrink this bit down. October average used auto asking price was about 28,000, right? Just right in the middle there. So with this is very good context because again, if Tesla is going to make a more cost-effective vehicle, well then this kind of bodes well for the idea of a $30,000 EV. Because if they can make a $30,000 EV and then you throw on the $7,500 tax credit potentially, well now that means someone can get a car for $22,500, $23,000 that's a Tesla. I mean, wow, that's wild. And Tesla can still be making about 30% gross margins on that. So hopefully this lends itself towards Tesla moving in a faster pace towards this. But again, Tesla's problem has not been about demand. Their problem has been supply and producing enough vehicles, right? They have a production problem, not a demand issue. All right, so we've covered a lot here. So now I want to share my screen. And what I'm going to share is a chart, which you should be able to see now. There we go. Cool. All right, so what is this chart? All right, so this is an economic data research. Essentially what this is, it's total vehicle sales, zoom in here, total vehicle sales on an annual basis. So you can see on the left here, millions of units. And then here, the source is the U.S. Bureau of Economic Analysis, right? So again, like there's no me messing around with any data here or anything. This is, legit sources and real numbers. All right, so let me move this up here. That way we can see everything. All right, so let's look at this. 2010, or maybe 2009, we in the United States, we sold 10 million vehicles, 10.6 million vehicles. All right, this is in arguably the worst time period for us, right? It was the Great Recession. Everything was collapsing. People were, losing all their money, all their assets and their houses, and everything was just in ruin. People were going bankrupt. Lehman Brothers, right? You guys remember that? You know what happened there. All right. So during that scenario, during that time period, we only sold 2.6 million vehicles. Let's fast forward here let's go to 2019. Where's 2019? Here it is. All right, 2019, we hit 17 million vehicles, 17.5 million vehicles. The peak was back here in 2015 where we did 17.8 million vehicles, right? Now, it's funny because you see these numbers, and remember, Elon has a goal worldwide, of course, but to hit 20 million vehicles sold per year by 2030. But it's still interesting just to think of that in context. So the US hit a peak of 17.8 million in 2015. 2019, just before the pandemic, we're near those highs, 17,500,000 vehicles. And then, right, here's where COVID hit. COVID hit, and we dropped down to 14,800,000 vehicles. Now, this was, you can call it all COVID related, peak fear. But even with that peak fear, it was still way higher than we saw in 2009, right? Okay, so 14.8. But then we get into 2021, where you would have thought things would recover, I don't know, a little better. And we hit 15,500,000. Again, all right, maybe we're just coming out. Things are starting to open up. People are starting to get supply chains back. I mean, we can make a very good argument for why this number was lower. But what we see now, if I take you back to what I was showing you earlier, let me stop this real quick and let me pull this back up for you. I believe it was this one. Yeah, here we go. In 2022, we're on pace for 13.7 million vehicles. So what does that tell us? Well, that tells us we have a really big problem. All right. Even at the peak fear of COVID, we were still hitting 14 million vehicles sold in the year. Here now in 2022, we're looking at under 14 million, or at 14 million, if you will, when we have everything opened up, right? We have supply chains fixed. We have people out and about spending money. Even though we're essentially what I think is a recession, we still see people out there spending money left and right. We just had a record-breaking Black Friday. We're probably going to have a record-breaking Cyber Monday today. So people are out there spending. This is nothing like what it was in 2020 during the peak of the COVID lockdowns. Yet here we are with auto sales at 13.7 million. A huge, huge hit, a downward trend. So what's happening here? Why is this happening? Now, I think it's pretty obvious. I think it's been obvious for a while. I'm not the one who said this. Kathy Wood has said this. Gene Munster has said this. Many people have said this. It seems to me that many people are either waiting or foregoing buying a new vehicle until they can afford an electric vehicle. And odds are it's probably going to be a Tesla. Because there just aren't any other electric vehicles out there, really. If people want to buy a Bolt, they'd buy a Bolt, but nobody really wants to buy a Bolt. As far as the Mustang Mach-E, yeah, some people are buying it, but they have production issues. They're not ramping up well. They're not going to be able to benefit from a lot of the tax credits. The vehicles are made in Mexico. Maybe they'll rejigger the Inflation Reduction Act, the IRA, to allow NAFTA or former NAFTA countries to be a part of it. Who knows? But the point is, it's made outside of the U.S., so that may not qualify for the entire EV incentive, and it probably won't either because of the battery mineral makeup that you have to have. So there's issues there for Ford with the Mustang Mach-E. Rivian isn't ramped up quite yet. We see Lucid's struggling, ramping up. I mean, everyone's having issues ramping up. GM, they're not really coming out with anything. I mean, they're coming out with a lot of new things, but we're not seeing them really. So the point is, it's Tesla's market in the U.S. And so not only will they benefit from the EV tax credit, but they're the only ones that can actually produce vehicles. And it's my let's call this prediction or guess that what's happening is people are delaying their auto purchases until they can afford these more expensive vehicles. Now, we saw there that the average vehicle is about $45,000 in the U.S. right now. Now, I think people are willing to spend more money on a Tesla or on an EV if it means they get a Tesla, right? Tesla is kind of like the Apple effect where people are willing to spend more money. And don't worry, we'll touch a little bit on this whole Apple Twitter thing in a second here. But the point is, I think people are willing to spend more money. Now, this is a lot partly because I'm a Tesla investor, but it's also just me bias aside. I see this a lot. I talk to a lot of people, and people are saying, yeah, the next car I buy is definitely going to be an EV. I feel like I'd be wasting my money if I don't buy an EV for my next purchase. And so, I don't even talk about Tesla with them. I mean, they tend to bring it up to me, maybe because, around, my friends in my circle, I'm the Tesla guy. But the point is, they're bringing it up, they're talking about it, and logically, you would think that what they're saving for is a Tesla. So anyway, so all this to say that if we are seeing all of these sales decline and we're not having a good production or sales from a U.S. auto industry, well, then Tesla's probably going to be in trouble, right? Well, again, I don't think so because, like I said, I think most of the issues aren't from electric vehicles, but from the ICE world. And if people are starting to not purchase ICE vehicles and they purchase EVs instead, well, that dwindles the amount of sales we see in the auto industry. Now, other people may say, well, we're in a tough economic period. That's probably why this is happening. Okay, fair enough. That's a good point. But here's the other thing to keep in mind. It's strictly from an investment perspective. Let me bring this up here. That's way too big. Let's try and zoom this down a little bit. Okay, try this again. All right, we looked at this last week, if you guys remember, and I'm not here right now to talk about auto operating margins or anything. I just want you to look at the total vehicles sold over so far in 2022. So from Q1 to Q3 2022, you see Ford sold about 3 million vehicles and GM sold about 4.3 million vehicles. Tesla sold 1 million. Now, this is worldwide. Keep that in mind. So the point I want to bring out here is that with people choosing more electric vehicles, right? And I think that's pretty clear what's happening, right? People are choosing to go electric. Tesla has more of a runway because so far they're only making a small number of vehicles. Whereas all these other auto manufacturers, they have a large amount of vehicles that they make. And so they run this issue. It's like Tesla's a small percentage. So if things do slow down, they don't really affect them because Tesla has so much more room to grow. Whereas these other automotive companies, they are kind of at the max of what they can grow. So any slowdown, it affects them. And then you add on top of that, if there is a slowdown effect, okay, we have that effect. But then on top of that, people are deciding to move more towards electric vehicles. That's another effect that they're having to deal with. So in this whole picture, no matter how you slice it, if the reason auto sales are declining is because people are transitioning to EVs, well, really, that means Tesla's the only name in town. If it's happening because there's a issue with the economy and so people aren't buying as much, et cetera, and it's slowing down, well, again, Tesla doesn't sell that many vehicles in comparison, right? They're about 3x, 4x less vehicles that they're selling. So it means that they have so much more room to run compared to everybody else. So any effects from a macro perspective would probably lessen on them. So I just want to point that out. And one other thing, I guess, worth noting, and this was posted today on Twitter. Again, let me try and shrink this down. So here you can see James Catt, Q4 2022 shaping up to be a massive export quarter for Tesla with 37 boats combined from both Shanghai and Fremont. Previous record was 25 in Q4 21. All right, so this is essentially 50% growth right here, right? So yeah, right, 25, call that 35. Yeah, pretty much. Anyways, so this includes 21 total boats to Europe, 2 from Fremont carrying S and X, and a whopping 11 to Australia/New Zealand, right? These numbers are massive, absolutely massive. And so what we see here is that with Tesla, pretty much every car that gets produced is already sold. So we know these numbers are sold. And so if Tesla keeps having these amazing quarter after quarters deliveries and operating margins and revenue and income, it makes them a league in their own. So I don't think that Tesla is going to be affected by really any macro slowdown. I don't think Tesla is going to be affected by a transition to EVs because guess what? Teslas are EVs. If anything, they'll reap the benefits from all of this. And again, just like the Apple effect, the people the reason Apple, they don't make the most amount of cell phones in the world, right? But they do take up most of the profits of the cell phone market in the world. Why is that? Well, because they have the premium product that people want. Because you have the premium product, you can charge a premium price. And so the more affluent people gravitate towards that and they are willing to pay more and you get higher margins, etc. Same thing for Tesla. Because it's a more affluent product, it's more desirable, has higher brand recognition, they command the market. And then you add on top of that just their efficiency, their vertical integration, right? So they have all the goodness of the brand recognition and the benefits of the first mover effect, just like Apple did, except the big difference here is that Tesla also has their vertical integration and their abilities to save and reduce on costs based on manufacturing and real engineering. So this is a very drastic picture we're looking at here. And I think the numbers don't lie. It really appears like Tesla is going to be in a field of their own, right? They're going to be playing their own game. It seems like next year you're going to start seeing all these headlines of Tesla taking over all these other auto companies, right? It'll probably be Tesla overtakes Toyota in California's number one vehicle sold. It'll be Tesla overtakes Ford and GM combined in revenue, or maybe not revenue, in operating income, right? Margins still high. We'll have the Semi out. Cybertruck will be rolling off the line. We may get a surprise with the Semi here, right? One more thing. Who knows? Maybe they roll out the final version of the Roadster. That'd be pretty freaking awesome. Or maybe who knows? You just never know, right? So there's a lot of good things that could happen here for Tesla. Now, let's be objective. There are two potential issues. One, as we know, what's going on in China right now. There's a lot of unrest. There's a lot of protests going on, right? Sympathy, and thoughts to all of them. I hope everything's all right. And hopefully they can get past this in their own way. But it's sad to see. It's kind of shocking that, we're still living in this type of situation. But Tesla has their most profitable, their largest, and their money printing machine is out of Shanghai. So that could be a headwind moving forward. Now, with that said, I do think Tesla's learned from what's happened in the past. They've iterated. They already have plans in motion. They probably have already thought about how they would handle everything. They might already be doing things proactively now, right, to be in a closed loop system. Who knows? I think they're going to be fine. Also, I think demand's off the charts. I don't think there's any issue here. I don't think Tesla's going to drop prices again. If anything, seeing BYD trigger a price increase come January, I think that bodes well for Tesla. That bodes well for prices. That bodes well for margins, yada, yada, yada. Everything seems to be good on that front. Let's just hope things in China kind of ease up a little bit. Maybe these protests will allow the government to ease up somewhat. Who knows? Either that or they'll crack down harder than ever. And, we'll go back to closed loop system. But again, hopefully Tesla has already solved all that. Now, the other potential troublesome issue, Twitter. Well, right when it seemed like all the Twitter drama noise started to, abate, and we thought, well, what more could Elon say or do that would cause a catastrophic issue with Twitter that has a ripple effect onto Tesla shareholders? And why would it affect Tesla shareholders? Well, because people are worried that Twitter can't be profitable and they are, dying and they need more cash inflows. Well, where's Elon going to get it from? Well, he'll sell Tesla shares to do that. And that's a problem, right? So, and then there's also the potential for brand hurting, all that, like people are worried. So there's all kinds of things that could happen there. But after Elon let Trump back on, after Elon let Ye back on, you would have thought, all right, what else can Elon do that could spook these people who are just, always paranoid about every little thing, no matter what Elon does. If he sneezes to the left or sneezes to the right, everyone just freaks out. Well, he went ahead and picked a fight with, let's just say, the biggest potential guy in the shop, the biggest bully in the shop. Elon decided to go and put his finger right in his nose and said, hey, I don't know about you. I don't really trust you. Who's that big bully? Well, this is one of my favorite bullies, Apple. Elon decided to go after Apple today. Not a little, but a lot. He called Apple out on suppressing free speech. He called Apple out on their 30% charge on the App Store. He called Tim Cook out directly about why they stopped advertising on Twitter. Is it because they don't support free speech? He called Apple out about threatening to remove Twitter from the App Store. Elon came at him pretty hard. So, as you can imagine, Tesla stock freaked out because of this and sold off. But wait, it didn't. In fact, Tesla stock finished in the green. Mind you, a couple cents. We'll take it. We'll take any green day we can get. But it did finish in the green, as surprising as that was. So maybe even this big threat of being deplatformed from the Apple App Store, maybe we're starting to see the Twitter drama and news start to abate as far as an effect on Tesla. And maybe the biggest news that should have been all over every single mainstream media should have been FSD beta going wide release, but it wasn't. It wasn't, which is crazy. I cannot wait for that earnings call to happen and they say, yeah, we have about 300,000, 500,000 people using our beta software now. That's going to be crazy. And then to hear what they say about version 11, if it's not out already, to hear what they say about robotaxis, hear what they say about autonomy in general. It's going to be a very, very entertaining earnings call. So I don't know. Maybe the Twitter stuff isn't going to affect us as much anymore. Or maybe we're going to see it tomorrow. Either way, I think the numbers don't lie. You see auto sales really struggling, but you see Tesla selling everything they can make. You see auto companies like GM and Ford struggling to post profits on such a large revenue base. And then you see Tesla on a smaller revenue base, much, much smaller, and they're posting huge profits. The numbers don't lie, people. And the fact is, no matter how you slice it, even if you don't like Tesla, even if you don't like Elon Musk, even if you hate electric vehicles, what you cannot deny is that there's a rotation happening, a revolution is happening, and people are moving away from internal combustion engine vehicles towards electric vehicles. And at the very least in the United States, it's kind of a monopoly, and the monopoly is Tesla. All right, we're going to leave it there. If you enjoy this type of content, do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Enjoy the rest of your week. See you Wednesday. Peace.